Hello everyone, and welcome back to the channel. Today, we're diving deep into the gold market. We've seen some fascinating price action lately, and a lot of you have been asking, where is gold headed next? Is this the beginning of a new major uptrend, or are we looking at a potential pullback? Well, in this video, we're going to break it all down. We'll analyze the key technical levels, look at the fundamental drivers, and map out a clear trading strategy for the upcoming sessions. So, grab your coffee, get comfortable, and let's get into the charts. First, let's take a look at the daily chart to get the bigger picture. Gold has been in a strong uptrend for several weeks, breaking through multiple resistance levels. The most recent surge took us to a new multi-month high, which is a very bullish sign. This move was primarily driven by a combination of factors: a weakening US dollar, persistent inflation concerns, and a flight to safety amid geopolitical uncertainties. When we see these fundamental drivers aligning with a strong technical uptrend, it creates a powerful backdrop for a continued move higher. The price is currently consolidating just below the recent peak. This is a classic pattern. To pay after a strong impulsive move, the market often needs to take a breather, build up energy, and allow buyers and sellers to find a new equilibrium. The key question now is whether this consolidation will lead to a breakout to the upside or a deeper correction. To answer that, we need to zoom in on the lower time frames and identify the critical support and resistance levels. Looking at the 4-hour chart, we can see a very clear range forming. At our upper boundary, our immediate resistance is right around the recent high of 2,350, a decisive break and close. Above this level on the 4-hour or daily chart would be a strong signal that the bulls are back in control and are ready to push prices higher. If that happens, the next logical target would be the psychological level of 2,400, and potentially even higher towards the 2,420 area, which has acted as a significant pivot point in the past. On the flip side, the immediate support is located around the 2,320 level. This area has been tested a few times and has held up well, indicating that buyers are stepping in to defend this price. If we see a breakdown below 2,320, it could signal that a deeper correction is underway. The first target for sellers would then be the 2,300 psychological level. This is a major support zone. Not only is it a round number, but it also aligns with a previous resistance level that has now turned into support. A break below 2,300 would be more concerning for the bulls and could open the door for a move down towards the 2,280 support area. So, how do we trade this? Let's talk strategy. Given the strong underlying uptrend, my primary bias remains bullish. I'm looking for opportunities to buy, but I want to do it at the right price and with confirmation. My preferred strategy is to wait for a breakout. Specifically, I'll be watching for a clear and convincing close above the 2,350 resistance level on the 4-hour chart. If we get that, I would consider entering a long position. My stop loss would be placed just below the breakout point, perhaps around 2,340. To protect against a false breakout or a fakeout. My initial profit target would be the 2,400 level. As the price moves in my favor, I would trail my stop loss to lock in profits and protect my position. Now, what if the price doesn't break out and instead starts to fall? Do we just sit on our hands? Not necessarily. There are two potential scenarios for buying on a dip. The first is a retest of the 2,320 support. If the price pulls back to this level and we see strong bullish candlestick patterns forming, like a hammer or a bullish engulfing pattern on the 1-hour or 4-hour chart, it could be a good, albeit more aggressive entry point for a long position. The stop loss would go just below the low of that pattern, with the initial target being a retest of the 2,350 resistance. The second, and more conservative dip buying opportunity would be at the major support zone, around 2,300. A pullback to this level, after such a strong run-up, would be a very healthy correction. I would be very interested in buying around 2,300, especially if we see signs of the price stabilizing and buyers stepping in. Again, confirmation is key. Don't just blindly place a buy order. Wait for the price action to tell you that the support is holding. What about shorting? While going against such a strong trend is risky, There are potential opportunities for counter-trend traders. A breakdown below the 2320 support could offer a short-term selling opportunity down to the 2300 level. However, this would be a quick scalp, not a position to hold for a long time, as you'd be trading against the dominant momentum. More significant shorting opportunity would only arise if we see a firm break below the 2300 support zone. A breakdown of that level would indicate a more significant shift in market sentiment and could lead to a much deeper correction. In that case, shorting on a retest of 2300 as new resistance could be a viable strategy. Let's also quickly touch upon the key economic data to watch. The Consumer Price Index (CPI) data and the Federal Reserve's interest rate decisions are always huge market movers for gold. Any surprises in inflation numbers or a more hawkish or dovish tone from the Fed can cause massive volatility. So, always be aware of the economic calendar. It's crucial to avoid holding a tight stop-loss position right before a major news release, as you could easily get stopped out by the volatility, even if your directional bias is correct. To summarize our game plan for tomorrow. Strategy 1. The breakout. We're looking for a confirmed break above 2350 to go long, targeting 2400. Strategy 2. The dip buy. We're watching for bullish confirmation at the 2320 support for an aggressive entry, or waiting for a pullback to the stronger 2300 support zone for a more conservative entry. And for the counter-trend traders, a breakdown below 2320 could offer a short-term scalp opportunity down to 2300. Remember, trading is all about risk management. Whatever strategy you choose, make sure you know your entry, your stop-loss, and your target before you even place the trade. Bing! Never risk more than you are willing to lose on a single trade. I hope this detailed analysis helps you navigate the gold market in the coming days. Remember, this is my personal analysis and not financial advice. Always do your own research and trade according to your own plan. What are your thoughts on gold? Do you think we're heading to 2400, or is a correction overdue? Let me know in the comments below. I read every single one and love hearing your perspectives. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe and hit that notification bell so you don't miss any of our future market updates. Thanks for watching, and happy trading!